Hey traders, Parker here with another indicator, actually a bundle. If you're familiar with my buy, sell, volume, pressure indicators, this is a bundle that I've created, and I actually made some adjustments to the buy, sell, volume, this low indicator that you're familiar with. And if you look right here, I'm going to push it back to the previous day. And basically, if you watch my previous video, the Thinkorswim updated DTR ATR rangefinder, I introduced this indicator in the video, but I want to go through what the actual indicator does. So this is the actual indicator that everything is based off of, besides the actual volume down here. But it's basically based off of buy, sell, pressure average within the candles, and that's what it does. Here you have the difference. If buying pressure is basically buying volume minus sell volume according to the buy sell pressure equation within the candles. So this is a difference in the histogram. It shows you the difference between the buying and selling average within these candles. You can see right here, you had a big move. It was a down, but you got a divergence. This little cyan arrow is just showing you that there's divergence there to the buying side, and you got to push up. You can see how the difference histogram pushed up, and this white and blue line is your momentum line. It'll turn white. Excuse me, if the momentum is going to the high side, it'll turn blue. Momentum is going to the downside, but this is mostly based off of volume. Even though prices continue to moving up, this is moving down, so that's kind of like another divergence. And you can see right here, price couldn't break above that, but then you got a divergence here. You got a this upper indicator is going to correspond to the lower indicator, and it actually mimics it. If you see the changing within the difference, you can see the changes within this cloud twisting around this average. This white and blue line right here is your closing average. And right now it's based off of exponential move average, but you can put on whatever you want to do. You can change it. This cyan color right here is your average right here. The momentum is based off of the difference as well. If buying volume is increasing, and the momentum line would continue to push up, and they'll just keep adding the difference between buying and selling from the previous candle to the current candle, and that's where you get the momentum line. You have your divergences within there, and then here within your labels, you have your difference in buying and selling average. You have your buying volume average. You have your selling volume average as well. And this is the same thing down here within these labels. For the monthly to work, you have to be on a 30-minute time, at least have 30 days worth of data. And you can see anytime you got a divergence, the stock reacted to at that time period. So you got a divergence here. You got a pullback. This would have been a nice entry right here. But you probably would have waited for confirmation of the candle or closing price to get back above its average and just ride it up there. So you actually get a divergence line right here. That yellow line. And I actually put in a stop loss as well and a share count. So whatever you put in here, this point right here, if your trade amount is your $1,000, then it'll punch out how many shares you can buy of that stock on the side of that, and then you have your risk amount is $20. So, and it'll tell you to lose $20, Tesla has to drop down to $800. So I'm going to put it on the on-demand, and then we're going to look at it from a different point of view. And you can see right here, you had selling divergence here. Even though the stock moved up after that, it was able to claim that became support. And then you had a buying divergence right here, and you got to push up And then you got to immediately push down on this stock as well with this selling divergence. And here's your buying divergence here, opportunity to actually come in and buy the stock right there. But I don't think this day is a good day, so I'm going to push this to, what day is this? I'm going to push it to 7.5. I think that'll be a better day, or showing the indicator how it works. So this is 7.5. I don't remember what happened on this day, but you did have a steep drop in Tesla. You can see right here when you got this buying divergence, the stock set right there, and it acted as a place of support until you got this selling divergence here, and then got a push down, and then you had your buying divergence here as well. You can see it was extreme. It was a lot of volume that came in, because if you look right here, it was over 942,000 in volume to the downside, and 500,000 right there. So I'm gonna actually change this to about 12 o'clock. And you can get an idea basically how the indicator works. And like I said before, this top indicator corresponds with this lower indicator. Excuse me. You have your selling divergence and you have your buying divergence here, and you can see how the stock reacts. And like I always say in all my other videos, you want to pair this indicator with another indicator, and that's exactly what I've done right here. Even though you got a twist, it don't mean to the buying side. It don't mean you take that and for an entry, but you use whatever other indicators that you want that you believe is going to help you figure out where your entry points are. And for me, this actually helps me confirm for a pullback and a possible push up. And I would take an entry right here, but this is not my this is what I do. This is not financial advice. This is just how I use the indicator, because it has volume and price built into it, and it's using the formula for buying and selling volume pressure within these candles. And you see the divergence actually worked out here. You had somewhat of a stall. You didn't get a push back, but you got a push to the high side with a lot of volume. But it's more selling pressure on this candle right here, but it couldn't bring it all the way down. So it actually pushed up higher, came back to the closing average of 12, and it continued to push up higher. These labels are based off the same thing as this label right here. It's gonna add the difference. So buying buying volume minus selling volume, and it's gonna add the difference. So if the buying minus selling was positive, then it's gonna add the difference to it. But if buying minus selling volume was negative or lesser, it's going to subtract that volume from it. And that's basically what you're seeing within this momentum line. When selling volume was greater than buying volume, you got a subtraction right here. That's how this momentum line works. And it's the same situation in these labels. The buying selling volume down here, volume with buy sell pressure, MTL, it's going to change the colors of the candles according to the buying volume buying volume and selling pressure, and that's where you get these colors from. And the white is the ultra high and the yellow is ultra high, and the bright green is high volume, bright red is high volume, light green is less than average volume, or really say average volume, and this dark green is ultra low volume. And you can make all those adjustments down here within this the indicator. So right now, if a candle is less than 7% of the volume average, it's considered ultra low volume. And this is the MTL multi time frame length. If you watched one of my previous videos, I did that. I explained this, but for the most part, these links are gonna correspond with these different time frames. So for me, I like to look at things on an hourly basis. So for the most part, 12 bars equal on a 5-minute chart equals an hour, and that's why that one is preset for 12. So anytime I go look at a 5-minute chart, these links are gonna automatically adjust to 12. If I go to a 10-minute chart, it's gonna automatically adjust to 6, automatically adjust to 4 for 15, automatically adjust to 16 for 30, automatically adjust and for 8 for an hourly, and 20 for a daily chart. You can hide those bubbles for the stop loss and the shares. And that's pretty much the indicator right here. If you watch my previous videos on the buying and selling volume pressure, and I go into more depth about it. But this is the bundle. You can get it in the link in the description of the video. If you have any questions or you have any comments or anything, please leave them in the comment section. And this is pretty much the end of the video. But I wanted to show it on a couple of different other stocks. But if you haven't already, please like and subscribe. And I appreciate your time for taking the time out to watch this and listen to me. So before I go, I'm going to put on a couple of different other stocks. And I wanted to show you on a couple of different other days as well, especially on like the down days. This is an up day where it's a down day. And this is one of the times where I say you want to pair it with another indicator. And you got a down day, but you're seeing this momentum. The buying is pushing. The buying is actually coming in. And you can see how the buying pressure is actually coming in. You can see how the candles are moving up. And once you get above the closing price, you may want to take that trade. You may not. But you can look right here, and you can use this as your support area or your get out area. If the price actually drops below this, you can get in here and use this as your risk right here, a possible support right here, and ride it up to the top to the at least right here where you got your selling divergence. You had another selling divergence here, and the stock reacted to it by pushing down, but it didn't make a lower low, but it made a higher low right here with this buying divergence, and you got another push up, and it just rolled out from there. So we can one of the stocks that they've been talking about is TBLT, I think it is, Tough Built. This stock is really, let me get rid of the drawings. This stock has really been on a tear. Today it's had the same thing. The pre-market, it pushed up, then it had a pullback, and then it pushed all the way up to 9. What was that, 950? Or what is that? 935. So this stock's been on a tear. You can see how the indicator actually showed the same thing as well, and how it reacted to it. You can see the same thing right here. You had a immediately push up for the day, and you got a selling divergence right here, and you got a push down. It tried to stay in this area of support, and it got pushed down, came back, got rejected, and then it got support right here. You got a higher low on the divergence, and you got this area right here acting as support, and then you have this area right here acting as resistance, but it got it pushed up and above that. And we can go to, this is just another day where it pushed up, support, resistance, or those divergences. And that's one of the reasons why I added this closing average in this indicator, because I had always talked about pairing it with another indicator to best assist you and help you with making decisions whether to get in or get out. So we can go look at what is Amazon complete washout today. Get back all the gains, at least from 125 back down to 121. You can see how this pre-market area worked as a support until it finally just completely just collapsed. Had it tried to push back up, but you got a selling divergence here, and it pushed all the way back down. Tried to come back above, same thing. And that's pretty much how this indicator works. It's like I said, it's based off of the equation for the buying, selling, pressure, volume indicator, original, just with the candles. But I took it a step further and added these averages and found a difference, found a momentum, and really created this bundle. So within this bundle, what you're gonna get the buy, sell, pressure, volume, average. This is the upper one. You're gonna get the lower one. You're gonna get the labels, and you're gonna get the volume as well. And all these, everything can be adjusted to however you like. And I'm just going through different stocks now, just looking at it. Bank. Wow, this is crazy over here. But you can see with Bank of America, it's completely just shot up, and you just rode the wave. Like they say, ride the nine. But I'm looking for bad days and good days. You can see right here, you had a big push up pre-market. You had bearish divergence here, another bearish divergence, and you finally collapsed to a bullish divergence. And these little divergences are acting as areas of possible support and resistance. And you can look right here. You had your bullish divergence back here, and then the stock went up from there. Reacted right here. It had to get back above this bearish divergence and continue went up. I know ES is still open, but there's not a lot of volume in it. Right now, the shares are showing 0 because I have it set at 1,000. But I know ES is still open. So I was looking for it actually performing. But you can see right here where it had this buying divergence. Use this area as your possible entry. And use this area of support. And then from there, just riding it up. Once you got back above here, you could have took an entry at the 9. I mean, not at the 9, but at the closing average. Because this indicator, the blue cloud is indicating that buying is above selling pressure average volume. You have your divergence to the high. It pushed back, came back up, pushed down again, but it looked like it's just going back up though. And I think I'm going to go ahead and end the video here. What else I want? That's going to be the end of the video. I appreciate you guys taking the time out to watch this video. Hope you liked it. Hope you found some worth in it. Y'all have a great day. And remember, stay safe out there.